Hey, 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 what's up, Elevate 3.0 people? Man, I tell you, you see, as I come on, them check with the DJ. What's going on? I can't get any little love. My goodness, y'all. What's happening? Happy New Year. Happy New Year. We made it. Just barely, although I feel like 2021 has already started to say to 2020, challenge accepted. It's like, what is going on? The madness in Washington, D.C. I mean, every day there's just something else happening on the news. But guess what, guys? Guess what? We still going after our goals in 2021, We are going after our goals in 2021. So first of all, I want to big up and thank Jerome and DJ Coppersean for an awesome warm-up session, right? We love the giveaways, right? We love the giveaways. At one point, I was like, Jerome, man, you give away more giveaways than we have in the bag, But we're happy that we're already giving away prizes and surprises, and that's what Elevate is about this year, guys. You can't leave us. Stay tuned. You don't want to miss an opportunity to win a prize, win a giveaway. We have lots of prizes and surprises in store. So again, welcome, guys. It is Elevate 3.0. Yes, COVID is still here. It's going to be with us for a while. It's going to go eventually, but it's here. And guess what? Our goals are still there for the taking, for the dreaming. And JMMB, as usual, we're still here. We're not stopping. We can't be in a ballroom with hundreds of people anymore. But this is what it's all about. We're on the interwebs, okay? We're using this awesome virtual platform to bring you the goods January just the same, because we're going towards our goals. So thank you so much, guys, for joining us. First of all, I want to also big up our sponsors, without whom this couldn't be a reality. We have to big up our sponsors, Adam and Eve Day Spa. Can we get a round of applause? Use that little applause button, people. Big up the sponsors. They've already given away some awesome gift certificates. There's more to come, so stay tuned. And as well, we have to bring up Brescia, another one of our fabulous sponsors, one of their, which way I'm turning, one of their awesome bags in the back. Big up Brescia. Thanks for coming on board. We have to big up M10 Bar and Grill, keeping us refreshed, keeping us fed, providing us with some awesome gift certificates. And guys, M10 food, nice, and if the price is right, it's very affordable. Love it. Sometimes them save us plenty of time with the Sunday dinner. And then, of course, last but by no means least, Center Yourself, which is an awesome company headed by one of our very own JMMB team members that provides you with awesome body care, candles, soaps, everything to make yourself feel very COVID friendly. Keep up the spirits, keep fresh, keep young, keep vibrant. Thank you to all of our fabulous sponsors. Of course, may I read me instructions right here, people? I'm under instructions here. The team has instructed me. And remember, guys, please use that applause button. Keep the claps coming. Leave your comments, leave your questions. We'll try to get as many questions as possible in today's session. And of course, we have to give a special announcement, because in the days leading up, there are some people who completed a pre-event feedback survey. Thank you so much if you participated in that. Big up yourself. Thank you. We're going to be giving away some Amazon e-gift vouchers to 10 of you who completed that survey. So thanks again. And again, guys, there's still more opportunities to win in the activity challenge. Please, guys, remember to go into the activity challenge room window button. It's right there in the main menu. Complete the activities to rack up points, because the points can go towards helping you to win your prize. And yes, there are some prizes where you have to be in Jamaica to collect, but we'll work it out. If you're not in Jamaica, there are still opportunities, because we know we have an international audience. Now, let us jump right into it. Doing a little adjustment here with the camera. Let's jump right into it, because we have a fabulous, fabulous lineup of people. Hello. Call whoever you know registered for Elevate 3.0 to join today's session. Please to call them, WhatsApp them, text them, you know the drill. Tell them to get their butts in here, because we are about to bring it to you. We're breaking it all the way down, because we have the experts. This is the hottest ticket online tonight, because here is where you're going to get the information you need. Get your pen, your pencil, your electronic notepad, your tablet, your Apple Pen, whatever. Get it ready, because we are going to break it down here. We're going to be having the likes of Kalila Reynolds. Hey, I know Kalila got some fans. Let's see the applause button going for Kalila. We're going to bring her up in a minute. And then after she gives her presentation, then we're going to bring in with an awesome panel discussion with some awesome gentlemen. You know, we have to do the lady first, and then we bring in the gentlemen in the likes of David Rose, business writer, young investor, know him thing. We have Marc, Gayle, entrepreneur, and someone passionate about financial education. And then we have our very own JMMB, Andrew O'Connor, who is not only a financial advisor by day, and sometimes nights too, depending on when the clients need the support, but he's also just someone who's passionate about supporting people to achieve their financial goals. So they'll be bringing in their perspective in the form of an awesome panel discussion. So first up, as I said, we're going to kick off with the lady, right? So we know her and we love her, right? She has just totally blown up the place. I mean, 2021, and we're probably going to hear a little bit from her in a bit. Got a helicopter flying overhead, no curfew, don't start yet. But Kalila just blew up. We thought 2019 was awesome for her. She blew up 2020. In my view, she came in and owned the business and finance journalism space. She shares her testimony openly online. She's done so well for herself in how she's established her personal brand on social media, on the digital platform, launching her website. She has her own company, y'all, right? She's now her own boss. I mean, she just tore up 2020 and took the challenge that was 2020 and all of what the pandemic presented and turned it into an awesome opportunity. And she was with us last year. She had Ryan in tow, baking in the oven, right? But Ryan is very much here, happy health. If you're on Instagram, him did tear down half of the Christmas tree, and the poor Christmas tree barely survived Christmas. He's now walking, taking his steps. So he's no longer with us. Kalila got her body back. She's working out, she's doing her thing, and she's here tonight. So last year when she was presenting in January, no one knew what was going to come. She had her nice predictions of what to expect and what we saw in 2019. Then 2020 hit us, and she's back again this year. Going to do a little bit of post-morteming on 2020, but we're going to still be looking ahead. Now that we have a little bit more information with this COVID thing, what can we expect? So get out your pen and paper, because what she says will and perhaps should impact how you manage your money, how you invest, how you save, how you identify opportunities. So please, guys, hit that applause button, drop the love in the comments. Please join me in welcoming to our virtual stage our first speaker for Elevate 3.0, Kalila Reynolds. Hey. Hey.
Hey. Wow, with an introduction like that, Carrie-Ann, thank you so much. Wow, I feel so hyped up. You're a great hype woman. I feel like I need to take you everywhere I go to do all my introductions.
I should. Awesome. You should, because I'm loving your Instagram page. I want to go to half the page. You're looking fabulous. I love the red. I love it. Thanks for partnering with us and being on brand tonight. But you know, you're looking very different this year than you were last year. I mean, I know you're going to be going into your presentation. I'm going to be stepping back because you're going to be sharing your screen and all kinds of awesome stuff. But if you could kind of just give us a quick summary to kick us off. How did 2020 go for you? How did you leverage 2020 to your benefit?
I feel like you tell a story already. 2020 in the middle of a pandemic ended up being a great opportunity for me and my business. So we provide digital content, particularly business news, and digital content just blew up in 2020. There was this huge demand. All the traditional media who didn't realize the importance and the necessity of digital content, now all of a sudden they're scrambling to try and do it. And this is an opportunity that we had identified back in 2019, 2018. So now it just, we're here to take advantage of it. We're here for it.
Awesome. And on behalf of all of the Jamaicans here abroad and even non-Jamaicans as well, thank you for all of the awesome content that you've been providing at a time when people needed it the most. So I'm going to hand over to you, Khalil. I'm going to step back, give you the stage. I know you have an awesome presentation you're going to share, and it's over to you, Khalila. Thank you.
Thank you very much, Carrie Ann. All right, so let me start. I feel like I need some somber music. Where's the DJ back? I feel like I need something for this particular quotation. So I'm going to take you through my little presentation here, my little slideshow. So let's share the screen. I'm giving you my sound effects in the meantime. I don't know what music that is. All right, so here we go. 2020, the best of times, the worst of times. It was the best of times. It was the worst of times. It was the age of wisdom. It was the age of foolishness. It was the epoch of belief. It was the epoch of incredulity. It was the season of light. It was the season of darkness. It was the spring of hope. It was the winter of despair. So I know you can see where that quotation is from. Charles Dickens' A Tale of Two Cities, very popular book from 1859, but you would think that that is from 2020, wouldn't you? For some reason, in assessing the year 2020, that quotation, the opening to the book, A Tale of Two Cities, is what came to mind. And I know I stopped sharing my screen just now. I'm going to go back and forth between myself and the screen. So that quotation just really jumped out to me as something that epitomized the year 2020 when you really think about it, the best of times and the worst of times. And why do I say the best of times? Some of you might be thinking, Kalila, best of times? I get the worst of times part because 2020 did rough. It really was rough. But there are so many things that happened in 2020 that I think set us up for a year that really is a marker in time. So we've had so many opportunities from this pandemic. Carrie Ann told you a bit about my personal story as well with my business. We've had opportunities for rebirth. We've had so many instances of innovation. So it was the winter of despair, but it was also the spring of hope. And when you think about it, really, the best ideas have often been birthed from or in the most difficult times. For example, in the 2008 recession, you had Uber and Airbnb that were basically invented and launched during that recession, two of the greatest companies. Those are two household names. Airbnb just had their IPO. They raised 3.5 billion US dollars. And people who invested in that got like 100% returns on day one when it started trading. So when you think about what great companies have been have been introduced within the past year, you might know some of them, you might not know some of them. I'm trying to navigate here between myself and the screen, so just bear with me. Let's get back to screen share. So what companies are you familiar with? What great companies of the next decade were introduced to us in 2020? Kalila Reynolds Media, of course. I had to throw that in there, right? But really, when JMMB asked me to do this presentation on looking back at some of the top business stories of 2020, so just like the year before when I was here for Elevate 2.0, I looked at the top business stories of 2019 and then look ahead to 2020. So when they said, give us the top 10 business stories of 2020, I was like, well, that's easy. COVID. Like, that's 10, right? Number 1 through number 10. That's pretty easy. COVID dominated the year 2019, and I feel like I could just start and stop right there. That's pretty much the summary of it from different angles. So COVID impact on tourism, COVID impact on entertainment, COVID impact on sports, COVID impact on healthcare, COVID impact on the economy, COVID impact on unemployment. There are just so many different elements to, I don't think COVID left anything untouched in the year 2020. Every single sector of society was touched by the pandemic in some way or the other. Some were negative, some were positive, but for sure, COVID had an impact on everything. So COVID was the story of 2020. Now, when you look back at it, I think 2020 will be remembered not just as Dickens said, an epoch of incredulity, like, oh my God, what happened, but also an epoch of belief. We had a new vaccine in record time. This is a whole new world. I think the year 2020, and it's interesting that is the name of the year, because 2020 vision, it allows us to see stuff. I think it's going to be a marker in time and history. Just like how 9/11 is a marker in time and history, we think about things pre 9/11 and post 9/11. I think we're going to be thinking of things, the new BC, before COVID and after COVID. So that is something that we're always going to remember for our lifetimes. All the lessons that were learned during this year. I feel like Carrie Ann told you about my young kids too. I have Enriquez, I have Ryan. They are growing up in this AC world, this anti-COVID, A-N-T-E, after COVID, or it's A-N-T-I, A-N-T-E, the post-COVID, PC, in this PC world, post-COVID world. And they're probably gonna be like in the future, people didn't used to like to wash their hands. Ew. You didn't used to have to sanitize before you went into a building. Oh my God, Mom, you people were nasty. You're so ancient. Banks, you had to stand in line at the bank. What's a bank? I've never been to a physical bank before. You're so ancient, Mom. I feel like in a few years, that will be the type of conversation that I'll be having with Ryan and Nerisi. So when I really started thinking about it though, so all these different angles and elements to COVID, but there were also some other things that stood out in the year 2020. And what I decided to do was put them into groups, into story groups of things that kind of go together. So the first one, actually, all right, let me get back to my screen share, if I can remember how to do it. All right, here we go. Screen sharing. Here's my presentation. So the first one actually is Digicel's bankruptcy. So that's story number 5, story group number 5, because there's a series of related stories that came to be with Digicel's bankruptcy. So when you think about Digicel, you think about this big giant, this behemoth. So that story broke in May of 2020. And the first thing you hear, bankruptcy, like, what? Digicel bankrupt? Digicel's going out of business? Does that mean my phone's not gonna work? What happened to I just win Shake to Win. They're still doing Shake to Win. And now you're telling me that Digicel is bankrupt? Like, people couldn't believe what was actually happening. But it's not that they were actually bankrupt. So what they explained was that there's this holding company, Digicel Group 1, and that's the company that actually filed for bankruptcy in New York. They also filed for provisional liquidation in Bermuda. And what they explained was that it wouldn't impact Digicel's day-to-day operations. So I reached out to their corporate PR, Antonia Graham, and she said it was a procedural thing. That's the way that she described it, a procedural thing by their holding company. However, a former CEO of Digicel Jamaica shared this little tidbit on Twitter as well. So this is how Justin Morin actually described it. So on the left, a procedural thing, that's what Antonia Graham said. On the right of your screen, you see this tweet from Justin saying the holding company owns the assets of Digicel across the Caribbean. So effectively, it is a Digicel bankruptcy. However, it does not impede operations, as this is a financial restructuring at the corporate level. So that's how Justin described what was going on at Digicel. But Digicel's debt issues have been very well known for a very long time. So Digicel has basically grown as rapidly as it has over the past 19 years through the use of debt. And what they've racked up over those years is $7.4 billion US dollars in debt. And why I have Jamaica's national debt down there for comparison is just so that you can understand the scale of how much debt Digicel actually had racked up. So this one company has 7.4 billion US dollars in debt. Jamaica, a whole country, the whole island of Jamaica, our national debt is about 14 billion US dollars. And you know, Jamaica's debt is not light, right? One of the most highly indebted countries in the world when it comes to debt to GDP ratio. Jamaica as a country has been racking up debt for decades. So Jamaica's debt is nothing to balk at. And Digicel is one company has just about, or had just about half of the debt that Jamaica has. So how were they able to get their debt down? They realized that they reached a point where they needed to bring this level of debt down. The debt was unsustainable. And so what they decided to do was to restructure their corporate bonds. Now, who actually holds these corporate bonds? Before I get into that, so they were able to trim their debt from 7.4 billion US dollars to 5.6 billion US dollars. And how were they able to do that? Well, they did that by offering bondholders something like 30 cents on the dollar for their Digicel bonds. Who are bondholders? You may think that there are all these big corporate people like maybe the World Bank and other big banks and so on, but a lot of these bondholders are regular people like me and you. So I was, I listened to Cliff Hughes online. As you guys know, I worked at Nationwide up until October of 2020. And I still listen to that station a lot. There was this caller named Norma who called into Cliff Hughes online explaining that she was a Digicel bondholder, an elderly lady. She said she and her husband were sick and they relied on the proceeds of the bonds. So bonds are basically loans that you as an investor give to, or a lender give to a company. And they agree that they're going to repay the interest on these loans in certain installments, and you get your principal back at a particular time as well. Well, they had stopped repaying the interest. They had stopped paying the interest. And Norma's like, well, I depended on that for my utilities payment. And now we're not getting anything. And now you're telling me that you're only going to pay me back 30% of my money, 30 cents on the dollar. And those bondholders who refused to accept the deal are now essentially left holding an empty bag. I don't know what's going to happen to that. It sounds like some of them might want to take it to court. I wish them much success, but I don't know how exactly that is going to work out. So good for Digicel because they were able to reduce their debt, but bad, definitely very bad for bondholders. I personally know some to just ordinary people who lost a lot of money because of those Digicel bonds. So I think that definitely is going to be something to continue watching in 2021. What happens with Digicel, how the company is able to reorganize and restructure. Another thing that happened to Digicel in the past year as part of the Story Group, we saw their CEO, Allison, we saw her leave. She left the company in 2020, and they recently announced a new CEO. I soon tell her this young man's name. He's coming from Trinidad and Tobago. He was just heading Digicel in Trinidad and Tobago. He's also worked in the Middle East, and he is the new incoming CEO of Digicel Jamaica. So let me tell you, Alison Filbert was the previous CEO. She served just over a year. And the new CEO, the new guy is Jabor Kayumov. Don't really sound like a Trini name. Might be somewhere from the Middle East. Almost sound Russian, Kayumov. The brothers Karzamov or something like that. Crime and Punishment. You guys know that story. All right, so number 4, let's look at what was my number 4 story group for 2020. Number 4, definitely we had a whole lot of elections. So elections drama. If you recognize the 3 flags there in the slide, we had elections in Jamaica, the United States, and Guyana. So I was privileged to be covering the Jamaica elections at Elections and Boundaries Commission. And I was there watching as the boxes were completed, and this map just got greener and greener and greener with every box that was counted. So if you recall the previous map from the previous election, there was a lot more orange all over this map. This map now only has like little speckles of orange here and there, but it's predominantly green. So the JLP would have won a vast majority in the last election. Compared to some of the other elections in the region, it wasn't all that contentious, though. There wasn't a whole lot of controversy surrounding this election. Andrew Holness and the JLP were largely expected to win this election. All the controversy, I'd say, came with it was a COVID-19 election, a pandemic time election. Voter turnout was very low. Only 36%, I believe, voter turnout came out, as opposed to the previous election. It was like 48%. Voter turnout had been dwindling over the years. But this particular image stands out because this was from a motorcade that the JLP and Andrew Holness participated in. And they were strongly criticized for attracting large crowds, even though they said door-to-door campaigning was suspended because of the pandemic, and also you didn't have they didn't do a lot of the norm. It was also a very short election campaign period. They didn't do a lot of the normal things that they would do, but they decided that they were going to have these motorcades, not realizing that very large crowds are going to turn out to support these motorcades. No social distancing, very few masks in sight. So that turned out to be not such a great idea. And that was probably one of the biggest controversies, or one of the bigger controversies of this particular election. But the United States said, give me away. Why is it Biden and Trump going at it? How many of you guys watched the debates? Whoa, those debates were spicy, weren't they? So Biden and Trump were just going at it during this particular election. And you guys know Trump does not back out from a fight, right? Trump is the Donald. And he's like, I'm going to win this election, and this is going to be huge, and the election is rigged. And you know how Donald Trump does it. So he sure as hell gave Joe Biden a run for his money. And you see how that has played out with Biden winning the election and Trump, refusing to concede for quite some time, and then even inciting his supporters there on Capitol Hill. So the runoff, the repercussions of that election have spilled over to 2021, and it's going to be interesting to see that transition of power coming up, supposed to be next week, and of course what happens after that as well, because the Trump years there was just so much racial tension, especially last year, 2020. Everything just came to this boiling point. You had, a lot of misogyny coming to the forefront. You had a lot of, various types of sentiment that bubbled up in American society. And that's going to be interesting to watch this year and beyond, whether Biden is able to unite the people again, and what American sentiment is going to be like this year. In Jamaica, of course, the Holness administration has its job cut out for it. We're going to see where they take the country now, because they had so many plans for the country. Their whole poverty to prosperity message was the dominant message of the past 4 years. And now it's basically, you haven't heard much talk of that prosperity, and it's really hard to talk about prosperity when so many people have been suffering from the pandemic. Now it's just time to hold strain, essentially. But by far, the most interesting election of 2020, I wonder if anybody can guess what that would have been. The most interesting, if you were a part of Elevate, if you were at this event last year, you probably know what I'm referring to. Do you guys know who these people are? Any of them look familiar? You know who these people are? So on the left of your screen is David Granger. On the right is Irfan Ali. David Granger is the former president of Guyana. Irfan Ali, the current president of Guyana. Now, Guyana's election was by far the most interesting election of 2020. So if you thought Trump versus Biden was something to watch, if you thought Trump versus Biden was a reality show on CNN and Fox and MSNBC, and you just couldn't tune out, the Guyana elections, like, give me away, Guyana. So last year, I actually had Guyana as my #1 story to influence 2020, of course, that went through the window with COVID, but Guyana definitely didn't disappoint in terms of newsworthiness in the year 2020. The reason I had Guyana as my top story likely to impact 2020 was due to that massive $20 billion, that massive oil find. So they had anticipated 20 billion US dollars in oil revenue annually by the end of the next decade. They had anticipated that their GDP of about $3.6 billion would triple in the next 5 years. So this is a huge deal for Guyana. They have massive oil reserves. Of course, they're next to Venezuela, which has one of the world's largest oil reserves as well. So their economy is poised for growth, and not just that, but set for a major transformation. Now, it's in that context that we have to look at the 2020 Guyana elections. So David Granger, the president and the leader of the APNU AFC, he didn't want to give up power. So they just found these massive quantities of oil, and you're now telling me I can't be president anymore? I can't lead this country anymore and have access to these massive resources anymore? And if you know the context as well, the Guyana Parliament had been very contentious for the past 4 or 5 years since the previous election, because there was a deadlock in Parliament. So they have more than two parties. They have a multi-party system. And the main APNU AFC and the PPP Civic, they had the exact same number of seats in the Parliament. And they could not get anything done. It was just a pain. And I don't know why they hadn't called. A lot of people have been saying, they should just call snap elections from before, just redo the election, because nothing was able to pass through Parliament. So David Granger finally called the election. It was held on March 2, so just before the major impact of the pandemic. But it wasn't until August that Irfan Ali was finally sworn in as the president of Guyana, because if you thought Trump didn't want to let go of power, David Granger did not want to let go of power, not with all that oil money on the line. So they had the highly disputed Region 4, where there were allegations of election fraud. They had protests. They had demands that GCOM, that's the Guyana Elections Commission, release the election results, because it was alleged that they were basically hiding the election results and they didn't want to release them. They had a recount. They had multiple lawsuits. Like, some of them were some really frivolous lawsuits, if you were following it. They had even Bruce Golding. So Bruce Golding, former Prime Minister of Jamaica, he was the leader of the OAS observer mission to Guyana. If you see me looking all over my screen, it's because I'm heading back to screen share now. So Bruce Golding, as the OAS observer, the leader of the OAS observer mission to the Guyana election, said, "I have never seen a more transparent effort to alter the results of an election. It takes an extraordinarily courageous mind to present fictitious numbers when such a sturdy paper trail exists." Very strong words coming from Bruce Golding during this election in Guyana. So the final result, the final vote count, was 31 seats for Granger's PPP Civic to 33 seats for Granger's APNU AFC. Ali had 33 seats for the PPP Civic. So they now form the new government of Guyana after all that contention. And we see where Jamaican companies, and this is why I had listed it as number 1 last year, because of all the opportunities in this country, Jamaican companies have been looking to Guyana as the next big frontier, as opportunities are going to abound there. A new wealth class is likely to emerge. Lots of money is going to be flowing through Guyana. So I see NCB Capital Markets just announced that they're setting up an office in Guyana. Supreme Ventures is going to Guyana. Several Jamaican companies are eyeing Guyana for expansion. And so I still think that this is a huge opportunity for 2021 and beyond. Now, our story group number 3 involves the stock market. And you guys know I talk about stocks a whole lot on my various programs on YouTube, on Instagram, all over social media. So story group number 3 has to do with the stock market. And the year actually started off pretty good. So we had First Rock IPO was the first listing of the new year. And then we had the big one, Trans Jamaica Highway IPO. As you can see here, the open date was on February 17, and then it closed on March 2. And then what happened shortly after March 2? Well, March 10 was Jamaica's first case of COVID-19. So just a few days after Trans Jamaica Highway IPO closed, Jamaica experienced its first case of COVID-19 and the panic set in. So even before it listed, these are the numbers that IPO got. So there was tremendous interest in this IPO. More than 36,000 people applied to be a part of this IPO. So Trans Jamaica Highway now has more than 36,000 shareholders. Pretty much every day, it is either the most or one of the most heavily traded stocks on the stock market, simply because so many people hold shares in it. It was 130% oversubscribed. They received $25 billion worth of applications, and they accepted $14 billion of that. It was the largest IPO to date on the Jamaica Stock Exchange, listed at a share price of $1.41. Unfortunately, like I said, shortly after it closed, we had what happened with the COVID-19 pandemic. And I think that Trans Jamaican Highway, the timing of that actually had a lot to do with why the market crashed as much as it crashed. So we see March 10 here, and that's where I have this little circle. This is about the time that we had our first COVID case. The Jamaica Stock Exchange main market was trading well over 500,000 points. And points is just how they measure the performance of the stock exchange. And then in March, after that first case of COVID, it just dipped all the way down here. So we lost 27% of market value after the first case of COVID-19. And you see it's been fairly steady. There've been some recoveries. So it's been back up, back down, and it's gone back up to about 400,000 here. 399 and 390s range. So overall, at the end of the year, the JSE main market ended down 22% overall. So it's in the latter part of the year, you see this little increase, this little uptick right here around October, November. We saw some improvements, but it's still nowhere near where it was at the beginning of the year, 500,000 points. And I actually think that Trans Jamaica had a lot to do with the dramatic dip that we experienced. So a lot of people would have bought shares in Trans Jamaican Highway IPO, 36,000 people. And a lot of people would have been doing so for the very first time. You had a lot of brand new investors, a lot of young people, a lot of people who had never, they don't really have a full understanding, but they hear this highway is listing and they're interested. They hear the stock market has been performing well and they want to jump in. And then all of a sudden, this pandemic hits and maybe some of them lost their jobs. Now I need back my money. Like, oh my God, what am I gonna do? I no longer have a job. I no longer have a steady income. Maybe I worked in the tourism industry. The airports were closed for almost 3 months and I need back my money. So when Trans Jamaican Highway IPO finally listed at the end of March on the 24th, you saw an immediate mass selling. So lots of people who had bought into that IPO suddenly tried to just dump their shares and get back as much of their money as they can. And I think part of the reason for that, I spoke with Marlene Street Forest on this week's edition of Taking Stock, is that we still have a relatively immature market. People are still learning the basics. A lot of people are just starting to understand market basics. And so you had this vast panic sell, this vast wave of panic selling. And I think a lot of it can be attributed to Trans Jamaican Highway IPO. Almost every stock, if not every stock, was affected. Everything was down in March. Some recovered, some didn't. Like you can see, the market ended down 22% overall. So now let's look at later in the year. So when did things finally start picking up for the market? What started happening is that we saw Barita Investments test the waters in a major way. So in August, Barita said, you know what? We think it's time. We want to raise this money. We have these plans, and we're just going to jump right in and see if people are ready to start investing again. And they sure were. So Barita set a number of records with their APO in August/September. They raised $13.5 billion. That's 94 million US dollars. If you go back to Trans Jamaica, how much did Trans Jamaica raise? $14 billion. So Barita raised almost as much as Trans Jamaica, and Trans Jamaica was the biggest IPO. So Barita was the largest APO on the JSC, the largest additional public offer, almost rivaling Trans size. It was definitely the largest equity raised by a private sector company. Remember, Trans would have been a public sector company. And of course, it was the first successful offer since COVID-19. Now, Barita has been doing a whole lot. I think Barita is certainly one to watch for 2021. If you see, they've just been so aggressive. You can't even go on YouTube without seeing an ad for Barita for something. So they've been really aggressive in hiring talent. They've been really aggressive in marketing. They've been really aggressive in acquiring new business. They're currently doing the Derrimon APO as well. So you can see where Barita has been really aggressive. Their stock price is also up. So the APO price was $52, and their stock price is now at $83.89. So they're already up 61%. Now, since then, we've also seen Cygnus raise $3.3 billion. Derrimon, their APO just closed. They're seeking to raise up to $4.2 billion. Proven, that's still open. They're seeking to raise $4.3 billion. And for the look ahead for 2021, we're also looking at, let me share my screen again. And I know I have very limited time remaining. So we're going to start wrapping up very soon, but I want to look ahead at what's happening for 2022. So these are the APOs that either just closed or are out now. And so we're looking at 12 to 14 new listings expected for 2021. Alliance had already announced $2 billion is what they're seeking. We're expecting Fesco to open sometime very soon, perhaps as early as next week. We don't know how much they'll be seeking just yet. Number 2 story group, Miyaka put Japan lockdown. Put Jamaica on lockdown. The whole world on lockdown. So you saw tourism, empty beaches, hotels closed for 3 months, the numbers just dwindling, employment falling. We saw entertainment sector losing, I think it was like $50 billion in 3 months, and they're still losing. So the losses are in the hundreds of $millions for entertainment. Sports, we saw big losses as well. Unemployment fell, or rose, I should say. So you can see from this chart here that it had been falling from 11.3 in 2017 all the way down to 7.2 in early 2020. And then it skyrocketed way up back to 12.6% in July 2020. And that's because we don't have the April numbers. We don't know what the April labor force survey would have revealed. They were unable to go out into the field because of the lockdown restrictions during COVID-19. It's probably way up here off the chart. So a lot of people lost their jobs. We saw what happened with the Jamaican dollar passing $150 to $1 US for the first time, hitting 151.18 on August 21, the lowest it's ever been in our history. So this is what the fluctuations in the dollar looked like in 2020. We also saw oil prices go negative for the very first time in history. So oil companies were willing to pay anybody up to $37 US to take a barrel of oil off of their hands, because they just had, nobody was traveling, airlines are grounded, nobody's going anywhere because of lockdown restrictions. All this oil is just sitting there, and they were running out of places to store it. So they're basically saying, take this oil, we'll pay you $37 to take it per barrel. And oil, that's what it meant by oil prices going negative for the first time in history. 2020 definitely was a really weird year. So my top story group of 2020/2021 now is this light at the end of the tunnel. And this is the opportunities that we have seen coming out of COVID-19, out of this pandemic. What did we see? We saw digital transformation. We saw a lot of companies finally embracing digital technology. All of a sudden, everybody wants a website. All the companies that were refusing to go online before, suddenly they want, a website. They want to do e-commerce. So we saw digital transformation really speeding up in a big way in 2020, and that's bound to have an impact on the post-COVID, the PC world. We saw banks like Scotiabank and NCB closing branches and moving to more digital experience. And I know there's been a lot of criticism of that, but I genuinely believe that will ultimately be a good thing, as we see people who were reluctant at first to embrace the online banking, now finally embracing it. We saw companies going office-less. You may have heard QuickPlate and Edufocal being two of those that decided to give up their offices. So we're going to see a lot more of that. People telecommuting to work. We saw work from home finally being embraced. Less traffic, thank God. So if anybody's noticed, even now, there is less traffic. And we also saw a lot of new companies registered. So the second most new companies registered in Jamaica's history, over 3,500 new companies were registered. And that's only between January and November. I don't have the December numbers. So I think all of these things represent a huge light for Jamaica and for the world, and a huge opportunity for 2020, which is why I come back now to that quotation that I started with. It was the best of times, it was the worst of times. It was the age of wisdom, it was the age of foolishness. It was the epoch of belief, it was the epoch of incredulity. It was the season of light, it was the season of darkness. It was the spring of hope, it was the winter of despair. So that, in a nutshell, was the year that was 2020. And I think what we can look forward to in 2021 and beyond, this post-COVID, this PC world, is definitely going to be a much different place than the one we all grew up in. Our children are going to experience the PC world a whole lot different than we did in BC ancient times.
All right, Kalila, thank you so much, guys. Well, first of all, can we get another round of applause for Kalila? Man, I tell you, when you put this stuff together, I'm like, whoa. All the hard work, all the gathering of some great information. And it was, first of all, nice to take a walk down memory lane. It was interesting. I had no idea what was going on in Guyana. I had no idea.
Yeah, it was a hot mess.
Man, I'm telling you, all the way to August, but I guess glad they were finally able to sort it out. And as a country, hopefully they can continue to press forward quickly and easily. But it's good to know that in spite of a lot of things that didn't work out, there were still a couple of rays of sunshine here and there, and certainly some opportunities, right?
Yeah.
And I think that's the common theme. We really need to always remember that in the midst of every crisis, there's always an opportunity. And having gone through 2020, it kind of gives us a little bump, I would say, in terms of the muscle that we need to get through in 2021. And I think, certainly one of the key takeaways is make sure that we continue to educate and inform ourselves. We need to continue to follow you. Go to your website, sign up for your newsletter. Okay, I'm not being paid for this, people. This is not a free plug. But please, you have to educate yourself. You have to inform yourself. Kalila and her team do an awesome job every day, every week, just keeping everybody in tune with what's happening. And the information is power, and it helps us to make the right decisions we need to make. And we're going to close off Kalila's segment with, we have to give due props to her pointing there. Let's get this money. Hey, did I get it right?
Yes.
Yes, guys. So again, thank you, Kalila. I really appreciate it. We're gonna go quickly into our next session in the interest of time. But if we do have time at the end, we're gonna invite folks, invite you to come back if possible, so we can maybe do 1 or 2 questions at the end. So please keep your comments and questions coming in the chat, guys. And Kalila, thanks again. Awesome presentation as usual, and thank you for coming back to Elevate and being a part of 3.0, the virtual edition. All right, so we are now moving into the second and final segment of Elevate 3.0, Learn and Vibe on this here Friday. So we just got some awesome information from Kalila, and guys, we're going to keep the clip going. Now we're going to hand it over to some fabulous gentlemen, right? I'm not going to get myself in trouble like I did last year. I'm not declaring any marital status on the people them program, right? So I'll let anybody, they will talk to their own marital status. I nearly got in trouble last year, declaring who was single and who was available and who was not. So let's just leave that for another conference, right? But please don't slide into the DMs. We'll keep that as a common theme. We're going to just open up the stage now. We're going to have an awesome panel discussion with 3 fabulous gentlemen, right? First and foremost, we have 2 gentlemen who were with us last year. If you follow them on Twitter, they have fabulous content. The first thing is that they both are very passionate about financial education and empowering people to become more knowledgeable about personal money management and things financial. Yeah, they have their day jobs and day tasks. You know, Marc, Gayle is an entrepreneur, and he with TCP things. And then we have David Rose, who is not only a student, but he's also a business writer and investor himself. And yes, neither gentlemen are licensed financial advisors, as far as I can tell. So they will be coming with their own personal perspectives and experiences to share with us. And then last but by no means least, one of our very own JMMB team members, he's a manager of client partnership here with JMMB Investments. He's Andrew O'Connor, and Andrew, of course, that's his day job. He is a licensed advisor who advises our wonderful clients about how to manage and invest their money and achieve their financial goals. But Andrew is also, he is a dad, he's a husband, he's a brethren, and you know, he's also passionate about just helping to empower people to achieve their goals. So we're going to invite them on, and I'm going to have an awesome Q&A with them. There they are. Hey, gentlemen. Happy New Year.
Hi, Carrie. Happy New Year.
What's happening? What's happening, David? You look good, man. You can come into the camera with nothing wrong with your face. David look like he's doing a quick housekeeping matter, but no big deal. Great. So welcome, gentlemen. David, I don't know if you want to mute until you finish that little thing there. Wonderful. Thank you. Yeah, we muted him because, guys, we know how this thing going in the pandemic, right? We're at home with juggling. I don't know where Nerisi and Ryan were while Kalila was presenting, because you probably locked them up, but we all have to juggle and do this thing. So, gentlemen, thank you so much for joining us. We really appreciate it. And we're just going to jump right into this because I have some questions. You know how we do it. It's pretty much the same format we did last year. And I just want to start off. Let's start off with Marc. So Marc, yes, you are a husband, a dad, an entrepreneur, and again, someone who's passionate about financial education. Again, if you don't follow Marc on Twitter, please do. A lot of the times he will tweet under the hashtag #FinanceTwitterJA. And Marc, could you just, our first question, which I'm going to pose the same question to each of you, and you can answer quickly and tightly in your own special way, is what's your personal investment or investing strategy and style? Marc, I'm going to go to you first, and then I'll pose the same question to Andrew.
All right, cool. So for me, the way I look at it is I have effectively 2 portfolios. I have a public portfolio, and then I have my private portfolio, right? My public portfolio are, you know, the companies on the stock market that I have analyzed, that I like, that I follow closely, and then over time I just keep adding positions. In other words, I keep buying over time because these are companies that I believe will be strong. They have significant growth potential, and so I want to basically just own as much of them as possible. in 5 or 10 years, or 15 years or 20 years, I want to have a big position in them. So I'm just buying little by little over time, very, very consistently, and as the prices come down, and I redo my analysis, and then I keep adding to my position. So that is how I treat my public portfolio. My private portfolio is essentially the same thing, except I don't use cash. What I do is I look for companies that I can advise and create value for. And then those companies that I do is typically is early stage and entrepreneurs. I work with them, and then I earn equity over time. And it's a lot of work, but it works out. It can work out. So that has been my approach, and I actually encourage everybody to kind of take a similar approach.
Thanks, Marc. Much appreciated. And, well, first of all, just to roll back a little bit, guys, and this is to our audience. We are getting some great nuggets here tonight. And I know I just mentioned, Marc being a popular or highly followed persona on Twitter. Please, guys, if you want to tweet and share the nuggets that we've been getting here tonight, please do. Remember, our hashtag is hashtag JMMB Elevate. That's how we do it. Please share the nuggets. We want to keep the conversation going because, again, we are about empowering everybody. We don't have no scarcity mentality. It's abundance mentality we're dealing with. So please feel free to tweet and share what we're getting here on social media and tag in our respective guests who you can find. And then, of course, the hashtag is JMMB Elevate. So, Sir Andrew, what's up? What is your personal investing style? Because, you advise clients every single day. And of course, your advice is contingent on the client and their goals and how much risk they want to take on, etc. But for Andrew, what's your personal investing style that you kind of adhere to based on your personal situation?
All right. Thanks, Kerry. For me, it's as you said, as an advisor, there's a lot of information that I have that you share with clients every day based on what it is that they want to achieve. But for me, one of the things that has really worked for me over the time is just understanding what my own goals are, because I'm advising clients every day and they have varied goals. Some people want house, there's car, there's children, there's a lot of different things. But for me, I have to ensure that I focus on what Andrew needs or what my family needs. And then to ensure that, whatever investment options that I select, it is in line with that. And one of the things that I learned at an early age is that when it comes on to your goals and identifying your goals, if it is that you don't have anything specific, the money that you have will just vanish away. Meaning you have funds, but you don't have a specific goal that you're saving towards or you're investing towards, you will find a lot of different things to do with that money. And then you find out that you at the end of the day, it is not necessarily wasted, but it could have been better put to use. And another thing for me is, not wanting to be a part of a herd, because there are trends in investments that, there's a time when the stock market was booming and everybody wanted to go in the market. But for me, I have to understand that, hey, is this in line with what I want to achieve? Am I just doing this because it is the hot ticket now, or is this something that is going to take me one step closer to one of my goals? So that's one of the things that has really worked for me over this time.
Thanks, Andrew. And, guys, I mean, while what each of you would have shared just now is a little bit different-ish, what I'm picking up, though, is, first of all, being very clear about what you're working towards, your own personal goals, right? Because Andrew's goal may not be Marc's goal, may not be my goal, may not be David's goal. But it's about staying consistent as well. Marc spoke to, being very deliberate about, adding on, buying the shares, keep, taking advantage of what they call dollar cost averaging, which is basically keep buying, because ultimately the average price of what you pay for the stocks you're buying is really going to be at a great price. You don't wait until the price is low, and you certainly don't want to panic and sell when it's up there. You just want to keep at it. So consistency and being clear about your financial goals, not tapping into the hype I love that point, Andrew, as well, because that's what people kind of do too, you know. So Marc will tell you, yeah, man, if he makes a mistake and say, yeah, man, this is a stock him love, and him tweet about it, and people just run and go buy it, and maybe that stock that shouldn't even be in your portfolio again based on your goals. So I'm loving that. And it's a great segue to my next question. And guys, just to acknowledge that David is having some technical challenges. You know, we're trying to work it out with our team here in the back. So, you know, we're still loving on David, but we're trying to see if we can resolve some technical challenges. You know how it is, guys, with technology. You test, you double test, you're ready, and then so we're going to, hopefully we can sort that through, but we're going to continue with the conversation. And as I said, the key points that were shared in the first question, gents, is a great segue to the next question, because what would you say is the biggest personal lesson that you've learned? Because obviously you look like you have your game going on, right? You guys know what you're doing. You've made great decisions perhaps in the last year, but you would have probably taken a few wrong turns early in the game. And I'm going to start off this time with Andrew. What's the biggest personal lesson that you've learned about how to invest successfully based on maybe a past experience you would have had? Andrew, then Marc.
And that's a very interesting question, Kerry, because, you know, that's one of the things that we preach to our clients, which actually happened to me a couple of times, is that investing and emotions don't mix. It's almost like oil and water, because when it is that you're investing towards a specific goal and you have that emotions in tune, sometimes it kind of pushes you to make incorrect or untimely decisions. And that's one of the things that I learned at a very young age, that, you know, you cannot mix investment and emotions. Another thing that I also learned at an early age also is to ensure that you're doing your homework on any investment. And homework doesn't necessarily mean, all right, just looking on a recommendation. Maybe you have an investment house that says, okay, this stock is a buy, but you still need to do some further digging, some further reading, because there may be something about this company, even though it is recommended as a buy, that maybe doesn't sit well with you, you know? So it's very important that you do your own homework, and don't shy away from risk. A lot of times persons want risk-free investments. And of course, I'm sure Marc can tell you that there's nothing that is risk-free, but don't be afraid of risk. Embrace it. Just ensure that you understand what the risks are with any investment, and try to be comfortable with it. And once you can embrace that risk reward return, then I think you put yourself in a better position to be able to achieve some of your financial goals in the long term.
I love that. Yeah, take
Just
emotions
the
out of
camera.
it. Sorry, I think we need to mute David. We're trying to bring him back in, but his mic is open. But just to go back to your point, Andrew, that investing with emotion is a no-no, right? Yeah, bad way to make decisions. But at the same time, don't be afraid of risk. Be very honest about how much risk you want to take on, but don't be afraid of it. And I think just a big point and takeaway for that for me as well is, and someone had dropped a question in the comments, is that if you're not comfortable making decisions on your own, right, then there are other investment opportunities like unit trust. So let's say you don't want to go in the stock market because you really don't know, you're not sure which ones. It's good to invest in something like a unit trust that is rooted in stocks, where you have the investment managers doing the investing for you, if you're more comfortable taking that route. Marc, what's your biggest personal lesson that you would have learned?
Yeah, so Kerry, I was looking back at the answers from last year, right? And so what I said last year was, do my own research, or do your own research, right? Like, that's the biggest lesson. And while that's still true, over the last year, one of the things that really has kind of come home to me and has rung true for me is focusing on my own style. So in the answers to my first question, I spoke about, my public portfolio, my private portfolio, and then just, finding a handful of companies that I really, really like, that I have high conviction for. So companies that, I believe in strongly, that has, significant growth potential, companies that, I believe that I want to own 4, 5, 10, 15, maybe 20 years. And then I just, buy more of them over time as time passes and as my financial capacity increases. But over the last year, the truth. So that's my style, right? And that's my personal style based on my choice. And one of the things that can easily happen to you is as you talk to people and as you hear what other people are doing, you kind of get enticed by the styles of other people. So if other people are trading, doing short-term trades, or day trading or whatever, it's like, okay, even though that's not necessarily my style, I found myself doing that, right? And sometimes, and perhaps with a bigger portion of my portfolio than I would want. And the truth of the matter is that what I realized that's just not my style. And so for 2020, particularly in the latter part of the year, H2 for 2020, I took the opportunities to really just focus on my style, consolidate my portfolio, sell off a lot of positions that I had taken just because I was trying to do, some short-term plays, and just refocus and double down on, the companies that I love and the companies that I am, I have high conviction in. So, and then another aspect, another thing that I've learned is, and I speak about this all the time, make sure that you invest in companies that you understand thoroughly. And what Kalila just spoke about is the perfect example and illustration of this, right? So like, it's not enough to just, be a consumer of the company or to like the company's brand or like the company's marketing or even like the manager or whatever. You need to understand the financial health of the company, because if big Digicel, that is big Digicel, can effectively declare bankruptcy and return 30 cents on the dollar for some of their bond investors, if they can do that, then any company is fallible, right? And we know this. So risk, going back to what Andrew spoke about risk. Yes, we definitely need to embrace risk, but a key part of or a key tool in managing that risk is arming ourselves with knowledge. So attending things like this and investing in education, taking time watching YouTube videos, doing courses and so on, so you can learn how to read financial statements, and then doing a proper analysis of the company that you're considering before you invest, whether it is you're investing in their bonds or investing in their equity, because not just because they sell great products means that they're a great investment.
Thanks, Mark. I think that's an awesome point about arming yourself with the information, doing the research. There's a question that came up in the comments. Somebody said, if I don't work in finance, how do I build my own private portfolio? And the reality is, of course, yes, it starts with the research. It starts with understanding the different companies that you could invest in, whether it's stocks or there's bonds. And if you can do that and you can assimilate all of that information. But again, if that's not up your street, then there are options like a unit trust, or if you have a financial advisor who can manage a portfolio for you. That's probably a whole different conversation. But there are ways to really educate yourself, inform yourself, so you can make the right decisions. Hey, David, loving the hat. Happy New Year. Hearing us, David?
Again.
Okay, no
Happy
problem.
New Year. Can hear you clearly.
Great. So this is technology, so we understand it's how it is sometimes. So could you give us your perspective on what's the biggest personal lesson you would have learned about how to invest successfully?
Well, the biggest personal lesson that I've learned would basically be to, for one, observe patterns and also ideas. Everything is good?
Yes,
all right,
you're
so as I
breaking
was
up a bit,
saying,
but go
it would
ahead.
be about generating ideas and observing patterns. So to simplify that, if you know that a company is acquiring another company and that company can add significant value to the new owner, then the potential upside for you in the future on that stock. And that's just in context of you're looking for growth. If you're looking for something else in the sense of, let us say, for example, just dividends, then you look for stocks that are particular dividend yield how the business is focused, what can impact that potential. So for me, it's about generating ideas and looking and testing them back over again, because sometimes ideas that I actually had in the past can no longer apply to, as you would say, the current environment. So with COVID, what I had to do was I had to shift my strategy entirely towards, how I could, navigate this environment while capitalizing on, just the uncertainty in the environment. So what does that mean? So my strategy in this case, to sort of new ideas. So for some stocks, the last year there was heightened volatility. So because of that, yeah, some stocks were falling precipitously in a trading session, but recover later on in the session. So if you're buying for $4, a shareholder will probably be selling the stock out at probably $3.10, and I'd probably catch at $3.20. And the thing is, the stock price would normally go back up after to $4. So that was, an idea I kind of generated during the year to see, how I could take or adapt my style in terms of, how I usually do things in the past, in terms of, just buy and hold. I couldn't do that before. I had to really adapt and change my strategy to not necessarily be too constrained, but also in another sense be relatively flexible. So simplicity. I use company results to predict another company's results. What do I mean by that? So one company makes cement, another company sells the product. After I saw the results for that first company, I was able to make an inference based on information asked about the second company to make a profit after. So that was an idea I created, in the sense that I connected those two dots to see where I could actually generate further value. So that was kind of the change of the strategy for me. So strategy really and truly, is patience and building ideas. The style is about how you execute it. So I might see what you quote unquote say a wall and a market in a large block of shares, and if that is there, work around it. If there's a quote unquote spread between, say $1 and $2 is the resistance point because somebody has a large order there.
I got you, David. Thank you so much. I know you're still breaking up a bit, but I'm getting the big point there. Of course, you always underscore research and getting information, looking at the company financials, making sure you're clear about the company and its trajectory and why you should invest in them or not. All right. But I'm also picking up another key important point as well, is a whole matter of patience as well, guys. Probably as a result of not everybody doing the research they should have, and we experienced a bit of a bull market for quite a while in recent years. Some people unfortunately were under the mistaken impression that investing, and certainly stock market investing, can be a quick gain. You jump on the latest IPO and you make a big money or something like that, or you bet this price on it and you get a big return in no time. And I think even Khalila's presentation would have underscored that, especially based on what's going on now and also a bear market environment, which kind of was setting up from even before the initial COVID impact in March, is that we're in this thing for the long haul, guys. It's not a quick fix. It's not a quick buck, right? We have to be disciplined. We have to be focused, and it can't be about going in and out and turning a quick buck. That being said, because we know some people who would have had that experience, thinking back through all the years, and I'm going to go back to Marc, start off with Marc again. Thinking back through all the years of how you've been investing, guys, and maybe you would have taken a few wrong turns yourself. If there was one thing you could have done differently in terms of how you had invested over the years and any mistakes you would have made, what is that one thing you would have done differently? Marc, let's start with you.
So for me, it is, I would have started earlier. I keep saying this. I'm 30 something, but granted, I got married young, and I started my family young, and so there are personal restrictions that kind of came with that. But looking back, I really would, if I could change one thing, I would have been a lot more disciplined with getting started a lot sooner. Yeah, that's the only thing that I can. That's my key takeaway is just start. But that being said, now that I'm, I've kind of like, missed that period, I am playing catch up. So I'm a lot more aggressive now because, a lot of time has passed.
Making up for that lost time. I would agree with you. It's one of those questions where you say, boy, if you could tell your 18-year-old self something, what would that be? That's a very popular response. I know I would have started much sooner than I did as
And
well.
actually, Kerry, and so kind of like one of the applications of that is because I have kids and my kids are, 13 through 8, I have actually started them, like teaching them about investing. We started creating like a small portfolio. I tell them to stop asking for toys for the birthday, ask for their money, and then I take their money and invest it on their behalf, and they'll have a little portfolio tracker, and I take them through that. And when we get a dividend, I show them, okay, your $100 here pays you $1 here or whatever, so like I have taken my lesson in terms of what I would have done differently and kind of applied it to my kids.
Absolutely. I'm with that one, because when the kids get cash for Christmas, you take out a little portion for maybe go buy some toy or something, because
exactly,
the kids are kids, but the toy will mash up in 2 weeks. They probably play with the box more than they play with the toy. But then they ask, where's the rest of the money, mommy? It's in your account. It's in your JMMB wealth bill or whatever, because college is coming up. We have to pay for college. We have to get them started. It's very important. So I love that. Take the lesson and ensure that the next generation doesn't make the same mistake. Andrew, what's that one thing you would have done differently if you were to think back?
All right. So outside of the obvious, which is what yourself and Mark just shared in terms of starting earlier, for me, one of the things that I really wish I could go back in time and like rewire my brain is to allow my investor brain to not overrule my advisor brain. Meaning, as an advisor, we tell clients, all right, stick out, ride the waves. There's going to be volatility, but you have a long-term goal. Stick it out. Don't get the emotions, as I mentioned before. But that's easier said than done, because when it is that you're looking on your own funds and you're thinking about your own goals, sometimes it's very difficult to not allow that emotion to seep into the decisions that you make. So if I could ever go back, I would knock out that investor and just allow the advisor part of Andrew to make decisions and to determine the way forward. Because looking back, I think I could have been a lot further ahead had I allowed the advisor part of me to make decisions. And another thing that I fell prey to is to also, there are times when I didn't stick to my own style, meaning there are as I mentioned earlier about these fads or these trends that come in the market. And there are times when, even though my heart wasn't in it, I'm looking on friends and families and it's working for them. And I'm thinking, okay, if it's working for them, why it can't work for me? But once it is that you step outside of your true style, this is where you tend to make bad decisions. And of course, those bad decisions are with money. So you're losing money. And that's simply because it's not everything isn't for everybody. So you might be able to buy this company and it fits your portfolio and it operates well, but the minute I go in it, because it's not for me, I buy it at a wrong price or at a wrong time, and then that just goes south. So I'd love to kill the investor brain, allow the advisor to make the decisions, and to just be able to stick to my style.
I love that. And guys, this is yeah, it's the internet, but it's a safe space. And I love the fact that Andrew acknowledged that there were times, most people say we could start sooner, but there were times when we would have made decisions not based on the rudiments that we knew we should have made them on. There was a little bit of emotion, some people saw this opportunity, and then we jumped on the bandwagon. So it's really great to remain focused, and I think that's definitely awesome lesson learned. And I think a lot of us, and guys, I'm loving the engagement on Twitter, by the way. Keep tweeting out these nuggets, because this is stuff that I think can pour into somebody else, because what someone here would have learned years ago, we can pour into somebody, share the nuggets, and help people to avoid the same mistakes. David, what's the one thing you would have done differently thinking back?
Well, thinking of everything I've gone through already, I want to change anything. And you're like, wait, what? And here's a quote actually I came up with earlier. Failure is a necessary poison for growth. And when I say necessary poison, because if we never failed, we never actually learned sometimes. So here's where I say that is my initial strategy that I came up with worked for me. You know, I probably could have refined it better, but at the time, as I said, I kept teaching myself progressively, did the business classes. So for me, it was a learning process. Then, you know, I learned more and more. And I said those lessons that I've taken on taught me differently in terms of how I should look at things differently. So instead of saying, oh, the stock won't go down, don't do that. Have a contingency plan ready. So, for example, if I use a platform like probably Jimmy's One Line and I'm able to, you know, put in a particular stop loss order or probably a limit order in case the price goes to a particular point, then nothing is wrong with that. It's best to minimize your losses rather than extending further in the hopes that the price will go back up at a particular time. Because that's when I actually employed recently, you know, where take a loss at a particular point, we enter a lower point, and when that price went back up, you'd have benefited from that that different repositioning basically in a sense. And the thing is, experience is, as they say, the master of everything, because remember every time I change something, whether I've actually learned something new, or whether I've become the same mistakes. So changing things in the past wouldn't seem so beneficial now, because you could have said you could make more money, but in the same sense, having more money doesn't mean you can manage it better. So if a person couldn't manage $1,000 and there's $1 million now, they're probably going to lose it again, doing the same mistakes that they made before. So lessons I learned from the past actually help guide better to the future. So I wouldn't change anything really and truly.
Man, David is waxing philosophical as he normally does. I love that perspective, David. No, man. I mean, I love the wisdom. You know, I love to hear your wisdom. And I mean, that's a really good nugget, I think. You know, because in your particular perspective, yeah, there are more mistakes you would have made, and I think it's great to acknowledge that there's no one here who is perfect and would have made all the right decisions every step of the way. But in your instance, you're sharing your perspective, which is that every mistake, everything that didn't go the way it probably should have otherwise gone happened for a reason. And I think that's a great perspective because you learned from it and it helped to empower you to make better decisions going forward. Generally, that's what I'm picking up. So guys,
Correct.
first of all, thank you. That's the first half of our questions. And again, some great nuggets, and it's good to learn from other people. And that's what those questions were about. So now let's look forward, because I know that is a big question on everybody's mind, 2021. Okay, I've heard a couple of times a lot of people said 2021 seems to have already said to 2020, challenge accepted. Okay, hold my beer. Because it's like, dang, we don't even finish January yet, and the people them must storm the capital. But 2021, we're looking ahead, because again, we're not stopping with our goals. We're pressing through. I'm gonna start now. Let's just start with David. David, what is in your personal view? Because again, that's what it's all about tonight. So this is not gospel, people, but in your personal view, David, what's your prediction about what's gonna happen on the investing landscape in Jamaica 2021? What's your personal sense that you're picking up?
So what I'm picking up right now is that, there's going to be a debt restructuring. There's going to be more APOs, IPOs come to the market to raise more capital, in this case, equity capital. And you're going to also have more mergers and acquisitions. Reason being, COVID did a number on several companies. So for some companies right now, they're in a worse position than before COVID hit them. So because of that, so we need to actually recapitalize in order to prepare for the future. And in the case of other companies, they're in a great shape. They're actually looking to expand further. So because of that, they're looking as ways to actually benefit themselves further. So some companies, like your Kings and Properties, your Panjam, your Pulse, the RGR, iCreate, they already said, hey, we're coming back to the market, but we're coming with a goal to grow the company. You have Derman already coming into the market right now, proven as well this month with their APOs. And in that case, as you can see, the main perspective for those companies is expand, grow, and take advantage of the environment, because COVID and the crisis doesn't necessarily destroy the world. It creates opportunities for some companies, you're able to identify them. However, you wouldn't necessarily have all the capital per se on hand, and in the same breath, you don't want to necessarily also take on too much debt. You want to leverage yourself. And there's also the opportunity for companies to, inject new strategic investors into their business, which can build greater confidence. So, more money will return to the market, for sure, because the reality is you're looking at 0.1% in the bank, which is literal peanuts. And we saw today where the calendar inflation was at around 6.3% for 2020. BOJ pointed out as, point-to-point inflation was 5.3%. So, you're basically losing the real terms by like around probably 5% really and truly, 5-6% really and truly. So you have to spend money work. But when you invest in landscape, companies are going to come back strong. And then the thing is, it depends, because in the context of entertainment and tourism, it's a very tricky point of scope. Reason being, some companies without tourism have actually held strong and grown their actual earnings. Other companies, it was their main focus, their earning scope. So they really actually cannot, say, hey, we're going to come back strong or whatever. It's really just depends on the vaccine and the overall environment recovery. So that's a very, tricky perspective. But really and truly, it's going to be a great year for some companies, but the overall index is going to be relatively constrained because of how it's shifted towards like 5 or 6 companies, which make up like 70% of the overall index.
Thanks for that perspective, David. Much appreciated. And I know, you tweet a lot about this kind of stuff, and you do write a lot of awesome articles with the Observer. So what I'm picking up, definitely there are companies who are not rolling over and playing dead. They are looking for opportunities in the midst of the crisis, and they're going to be making and taking steps to leverage those opportunities. I think the key word of caution to investors is that obviously it's not going to be a quick turnaround, right? So we're not talking about fast buck turnaround opportunities. But if investors can identify companies who are continuing to push through finding opportunities that could position them better, stronger for the future, those could be things they could consider. Again, we always recommend that they consult a licensed advisor to make sure that they're making the right decisions for themselves. Andrew, what's your prediction based on what you're picking up over the airwaves? And I know you interact a lot with the investment managers at JMMB as well.
All right. So Kerry, listening to David just now, and all the information that is out there, articles that are being shared in the paper and so on. One of the main things for me in terms of what 2021 will hold for us is that there's still going to be a lot of uncertainty. And initially when this whole lockdown came through and the pandemic was fresh, a lot of analysts had it that Jamaica would be able to turn around in about 2 years. Now we're here in 3 to 4 years, possibly even longer. Or the level at which we're expected to contract, when we got those figures in March, April, by the time we got to September, October, we saw, revised higher figures. So there's going to be a lot of volatility. We can continue to expect it. I think you just mentioned that it's not going to be a quick turnaround. By no means, even though this may have happened to us in a year, we can't expect that by next year or this year, we're going to start seeing an immediate turnaround. But one thing I can say from being in the market, over 10 years and being a part of the recession in 2008, 2009 is that it will turn around. As bad as it may seem now, and for some persons who they're new to investing, they may think that, hey, this is it, there's doom and gloom, it don't make sense. You try and invest now, it's better you hold on to your cash and so on. For those persons, I'd love to say that it will turn around. Markets don't go up all the time, it doesn't go down all the time, it moves in cycles. So this is just a cycle that happens in the lifestyle or in the life of investing. For what I'm seeing or what I'm thinking is that there's going to be a spike in consumption. There's a lot of pent up spending because a lot of things have been cut. We can't go out and enjoy ourselves as much. There's a time when we couldn't even go to restaurants to eat. Persons are not traveling for vacations and so on. So, all those those monies that would have been put to those areas, for most of us, we're saving them up. So, when things start to go back to normalcy, there's going to be, or I'm expecting a spike in consumption. So, for your entertainment, your food services, and even tourism, there's going to be a spike. There are persons who can't wait to be able to travel again for vacation, or they can't wait to comfortably go to a hotel and enjoy a weekend at an all-inclusive, or they can't wait for parties to open up back. So, as an investor, what that means is it is good to be liquid, so you're agile, that you can move to these companies once it is that you can find a solid company that has good fundamentals. But for 2021, I think we can continue to expect a lot of volatility, but I implore investors to be patient and just ride out the wave.
Patience is a key word I'm picking up there for sure. Yeah, there are things that are going to be, as life kind of loosens up, get a little bit back to normal. As we said, we're now doing things we couldn't probably do 6 to 9 months ago. Starting to do that again, people starting to get out more, and once people start traveling more and doing more, we'll see that happening. But again, not a quick turnaround, so it's about sticking to the fundamentals and staying true to what it is you need to stay true to, and not be emotional and knee-jerk and expecting a quick buck. This turnaround is going to take a little while. Marc, what do you think? What's your perspective on where you think the landscape is going to look like? What do you think it's going to look like this year?
Yes, I think so. Both of those guys, Andrew and David, I think they raised some very, very good points. I definitely agree with, everything that has been said. As I was looking back at my notes from last year, and of what I said 2020 would look like, and the points I said is that we can expect to have IPO fatigue again. This was in January, right? So this is this time last year before COVID and whatever. So I expected us to have IPO fatigue. TJH, Trans-Jamaica, would be a watershed moment. The rate of new investors is likely to rise, and we'd see more digital tools, more education, and more wealth created. Well, I mean, March happened, and then COVID happened, and so the IPO fatigue didn't really set in. But what I think has happened is that there's a lot of pent up IPO kind of like in the system, right? IPO demand or hunger in the system from a lot of companies. Now, those particular companies, perhaps some of them that wanted to go public, have changed their minds or whatever. But now we are seeing, a lot of companies ever since, Barito kind of like cracked the levy, last year with their APO. A lot of other companies have started the process. Dermon being the most recent, and so I'm expecting, as David said, there are a lot of companies that are kind of undergoing a significant shift. They're probably going through some amount of distress, so that they may want to sell. The owners may want to just get out of business and have a nice, graceful exit and retire. So as a result of that, that creates opportunities for mergers and acquisitions, and so companies that are healthy, that have healthy balance sheets, are likely to want to raise a lot of money to take advantage of the opportunities, because even though the markets may be flat, and yes, the recovery may be muted and not be as robust or as quick as we perhaps initially wanted, the economy is going through a transformation, and it's a pretty significant transformation in my opinion. And as Khalida had said, I believe that in 5 years we're going to see a lot more digital things. Well, and we've already started seeing it, right? You have digital learning, companies like Edifocal, you have digital media, Kalila Ray Media, you have YouTubers, Meet the Mitchells and all these guys that, have kind of like come to prominence, in 2020. So over the next, 5 years, you're going to see more of that, right? And so this year, I believe, as in 2021, you're going to start seeing the seeds of that. So the investors that are prudent, that are paying attention to the fundamentals, keeping their ear to the ground, are willing to take risk, willing to, be patient, they will, over time, if they are informed and do their homework properly, they will reap the results of the seeds that they sowed this year. So I actually think that it should be aggressive and, for the best opportunities in 2021, because, in 5 years or 7 years, they will be reaping the significant rewards of the investments made in 2021.
Absolutely. And one of the things I'm picking up, and I don't know if we've mentioned it yet in this conversation, but yeah, when you mentioned the Mitchells, I think one of the great examples that the Mitchells and the MTM family, their YouTube channel, kind of highlighted was, again, opportunity in crisis, how people are identifying alternate income streams to make money and to build wealth for themselves and their families. So it's not just about the stock market and unit trusts and so on. It's about how are people using this COVID crisis to identify other ways of making money. A lot of people going online, right? Again, the Mitchell family, the Virgo family, another two awesome examples of just going on. It's like, what took y'all so long? There's that. Other great entrepreneurs like yourself going in and finding business opportunities, people pivoting, doing things with businesses. It's really, I think, an awesome time for people to continue to keep their eyes open about other income and wealth creation opportunities for themselves. Again, in the midst of the crisis, leveraging what is really a new way of life for a lot of people and new ways of spending money and so on and so forth.
Absolutely.
Just to jump into the next question, though, because it's good to level set in terms of what we expect the landscape to look like in 2021. I think the obvious next question is, well, if you were to pick, and again, we always like to be very careful when we ask these questions because we acknowledge, guys, everybody is different. So what we're discussing here or any nuggets that would have been shared here is by no means a one size fit all for everybody. But in your view, your personal view, gents, and I'm going to start back again with David, what do you believe is the top kind of investing, wealth building, wealth creation strategy you think Jamaicans should consider in 2021? David, what do you think that should be in your personal opinion?
Well, I basically, in a sense, puts into two views, but the main focus is to research deeply. And the reason why I say that is, right now, as Andrew kind of pointed out, was we're seeing a relative uncertainty because, look at it, you have these quote-unquote new strains coming out every second. The US and other major trade partners have imposed, as you would say, those new test requirements, which is basically going to put some pressure further on tourism and the connected sectors or the linkages. So if you're currently in 2021, it comes down critically towards your research and understanding the environment. Now, the reason why I say that is, if you know is a particular dive coming for a particular stock because you can bring in 2020 numbers, but the company itself is still solid relatively, then you can take an opportunity to position yourself from early. And one thing I actually considered for 2021 in terms of strategy, in terms of planning and everything, is actually my cash buffer. And when I said about cash buffer is because for other persons, those deals came last year, but we were broke. And it's pretty funny when I said we're broke, but the thing is, even though we're quote unquote liquidated to take some of these deals, for some persons, liquidity was still a major concern because we were still in a quote unquote asset environment because of COVID. So if we're talking about, type of strategy I can do, research. So I pointed out a while ago, the restriction I put in for tourism is going to impact some companies which rely on that kind of inflows to the country in terms of people moving back and forth. Yeah, the cruise industry is still suffering, so some companies which rely heavily on cruise arrivals are going to take a hit as well. Then you also have to consider, potentially people are staying home more, so check JPS financials or just to check available data out there. So research and use data that can guide you to the best decision, because instead of be a stock that to take up per se to capitalize on an opportunity, can be unit trust, can be in your friend's business. It's all about needing proper research right now to prepare yourself accordingly, because the thing is, even the company might, by quote unquote, generate more money, it also be the case of generate less money. So indeed their product might be in demand, a company might not be able to actually quote unquote benefit from this quote unquote surge in sanitation just because your main business is still focused on probably say chemicals. So you kind of see where, highlighting that if you did the research and know that, all right, the aggregate towards this amount of, product base, then I probably don't take a position in that company right now, just because until I see that kind of, ability or stabilization in probably transport data or whatever, I want, the best time to invest right now.
Love that, love that. And I love how you're always encouraging people to do the research, inform themselves. And there are many ways to do that. There are tons of newsletters going out by JMMB, various financial institutions you can subscribe to, following the awesome people who produce credible content on social media platforms, just talking to people who, are in the different industries, networking and so on. There are many ways to gather information. Keeping abreast of the news media as well is also another way. But I love that. Keep your research going, get your information so you can make informed decisions. Andrew, what do you believe is this top strategy Jamaican or any investor, quite frankly, because we have an international audience here? What do you think that they should be considering as a top strategy, perhaps, for themselves for 2021? I think you're muted, Andrew.
Oh, sorry. One of the things I'd like to stress is, something that our start with is something that David stressed in his response just now. And it's, about that cash buffer, or as we like to put it, to maintain a certain level of liquidity. It's difficult for a lot of persons to maintain liquidity because when you look at keeping cash, you're looking at earning less than 1% in most instances. And, it's for persons who have a specific goal, earning 1% or less is not something that is going to bring you any closer to that goal. But it's important to ensure that you have that liquidity for times like this, because there are solid companies that are on the stock exchange now, and their prices are significantly discounted compared to a year ago before COVID. So you look at these companies, they're solid, they have sound management, they're going in a positive direction. They have been able to react to COVID in terms of maybe changing how they do operations, how they interact with their clients, their customers, and so on. It's a solid company, but the prices are significantly discounted than where they were. Now, does that mean that this is not a company that I'd want to take a position in? Not necessarily, because it's solid. They're still profitable. It's just that based on what is happening, their stock price has taken a hit. Now, if I am liquid, I can take a position into these companies, and as we say, when you're doing investing, is usually for the long haul. I can wait until these prices get back to pre-COVID and then continue to even grow even further. So one of the things is it's very important to ensure that you maintain some amount of liquidity within your portfolio holdings. Look for solid companies, not just a company that is doing well now. I think Marc mentioned it earlier. Ensure that you understand what the company is about, what they're doing, where they're going. Understand who their competitors are, what it is that they're doing to capitalize in this new call it post-COVID PC. What are these companies doing to be able to sustain their profitability going forward? Because we understand that we're in a totally different environment now, and I don't think we're going to see a lot of things going back to normal, so to speak. So you want to look for solid companies. You want to look for companies that have value. I mentioned earlier, some of the companies nothing has changed for them. They're still profitable, still going in a positive direction. It's just that their prices have gone down, and we understand that in a pandemic, asset prices will take a hit. So look for those companies that have value in it. Look for the sound management, the good strategy, and ensure that you understand what it is that these companies are doing. So when it is that you take a position in it, you know exactly what is happening, where it's going, and you can follow it a little bit more closely.
Absolutely. I love that. And you know, something you said just kind of brings it out for me. And I'm not a licensed financial advisor, folks. I'm just saying, I put it out there. But one of the things that I got as a big takeaway from that point, Andrew, is yeah, definitely you're looking at companies who are making the right decisions. There are some companies who have weathered the COVID storm and will continue to do so very well. There are some that are pivoting, taking advantage of opportunities. But you know, sometimes some people, unfortunately, due to probably a lack of information, lack of knowledge, say, boy, I may go wait until the thing turn around before I get in the game, you know. And I think there's an opportunity again where when prices are low, actually, that's when you should be thinking about getting in if that is the right thing for you to do. Because the reality is, again, is that you said it before, things are in cycles. You know, we had a bear market at one point years ago, then it turned to bull, back to bear. What goes up must come down, and vice versa. So there is an opportunity, I think, for people to consider, again, recognizing it's not going to be a quick turnaround, but maybe if it's right for you based on your goals, how much risk you want to take, maybe getting in and getting some bargains in some stocks may be something you may want to consider if that lines up with your objective.
And Kerry, let me just add something. Too often as investors, we try to play the time game where you mentioned a stock is going down and they don't want to buy it now because they want to wait until things are turning around. So what you're essentially saying is, I want to wait until the stock price has reached its absolute low before I buy it. But the question I ask a lot of times is, how do you know when it is at the absolute low? And on the other side, a stock is climbing and they say, no, man, it have more to go, so I'm not going to sell it yet. And then with how our markets are moving, you know, so sensitive to data now, the price can change in an instant and you lose out on that opportunity to capitalize on gains when it's going up, or you miss an opportunity to buy at a low or a discounted price when it's going down. So, you know, stop trying to time the market and jump in and jump out. If you see a stock that is trading at a discount of 20%, why not buy it now? If it goes down even further, as Mark said, you buy some more, you know, and you do that dollar cost averaging. But too many times we try to time the market and we miss out on opportunities when we do that, or when we try to do that.
Love that. Thanks for that underscoring, Andrew. Marc, I see Marc itching in him seat. Him trying to itch in him seat. Okay, Marc, what's your take? What's your personal view on the strategy, the top strategy?
You know, say Kerry, you know, say when you were talking, as I said, John Star, Kerry say everything that I didn't want to say, you know, but
your point.
the team, no man, no, but it was good because what I wanted to do is I wanted to kind of like put a bookend on, like kind of like stitch together both points, you know, in terms of, you know, Andrew's point and David's point. David, you know, the whole notion of focusing your research or 100%, you know, on the money. You need to make sure that you are informed and you do the proper research now more than ever. You know, because when prices are flat or, you know, the market isn't really, you know, move in a bull market, we're in a bear market, doing your homework is more important. And then, you know, what Andrew was saying in terms of looking for the being, you know, staying liquid. I mean, what I would, you know, so what I would add to that is be bold. So make sure that you're very, you know, you inform yourself and you educate yourself and you do your research, right? But there are a lot of bargains out there. And so you want to make sure that, you know, you understand what's happening. You have cash. So you look at your portfolio, you know, you say, okay, boy, you know, re-examine your portfolio. What, you know, what don't, you know, what do I no longer believe in? Or what can I sell to free up some cash so that I can reallocate to bigger opportunities that I see, right? So you really need to like take a hard look at your portfolio, and now is the best time to do that because, so like, for example, you know, kind of, you know, piggybacking on what Andrew was saying, you know, there are certain firms, I will just take, you know, one industry, the financial industry, right? Like the financial industry has been impacted by regulation. BOJ has insisted that all the parent companies of all financial institutions don't pay dividends. And so as a result, it has affected the stock price of many companies. Some of the financial institutions have been affected more. But when you dive into their fundamentals, they are still strong. You know, so the question is, which ones have been affected more by that regulation than others? and how are they performing fundamentally, and what does their price, how are they priced relative to their value, right? So once the fundamentals are strong and and they're priced fairly very, very conservatively, aka they're undervalued, then now is the time to take an aggressive position in those companies, because it will pay significant dividends when those regulations, for example, get repealed, and when the economy starts to turn around and the market starts to recover.
Boy, thanks, Mark, for that nugget. Yeah, I didn't mean to tease your point. But, great minds thinking alike. And I think, again, this is, your personal perspective as it was mine. But, again, guys, it's an opportunity to really double down, do your research, get your information, make decisions that are aligned with your goals, how much risk you want to take, have the conversation with people who are more experienced and licensed in order to help you if you need some help to make those decisions, please do. But I think the point is well taken. And guys, I am getting a very aggressive wrap-up signal. So let me just tell you all, right? The whole marketing team, JMMB marketing team, is here at JMMB head office. And when curfew start, probably in another half hour. So we don't want police cart way up because we have to come back tomorrow. But just to remind everybody, because we're going to go into our final takeaway. We know Kalila has been waiting patiently. She probably drugged the children. They're knocked out cold. I'm kidding. But Kalila is going to come back because we're going to ask everybody just to give us one final nugget. But just to say, we are coming in to day 2 tomorrow of Elevate. So please, guys, we have 2 main sessions. We have a fireside chat tomorrow. Guys, no, Terry Carell is not hosting. She is a speaker. She's a panelist. So she's going to be dropping the nuggets alongside Lysandra Rickards and Scott Dunn. We're going to have an awesome fireside chat with them tomorrow morning in that session. Check out their agenda page. And then in the afternoon, we have 2 awesome international speakers who will be joining us again on our virtual main stage live, dropping some fabulous nuggets as well. So you don't want to miss it. Tell your family and friends to come on down. If they're registered, they need to join and get the great information. Hopefully, we should have more of our technology issues sorted out by tomorrow as well. Boy, guys, when you're working with technology, it is what it is. But we're continuing to press through, and we thank you for staying with us, acknowledging that we did get quite a few questions in the comments. We don't have time, but we've noted them, and we're going to work out a way to address them in some way, shape, or form to all of you who would have registered, certainly as soon as possible after we've ended Elevate 3.0. So, guys, let's bring back in Kalila into the studio. Hey, Kalila, thanks so much. And, guys, I just want to wrap up one final takeaway of all the things you would have perhaps shared in your presentation or you would have heard based on tonight's discussions and all that we've shared. What is the final nugget, the takeaway that you want our attendees here tonight to go with, simmer on, and put into motion, perhaps, or consider to put into motion for 2021 to make it as great a year as possible for themselves? Let's start off with the lady again. I hope I'm not laying hands on you too suddenly, Kalila, but a nugget, if you have, or anything you could say, what's a big takeaway from your perspective?
I think kind of summarizing some of the points that the gentleman made this evening, and it all leads back to let's get this money. Start early and start now. You don't need a whole lot of money to start. And something that I always tell people as well, set up a salary deduction. So you want to put that money into, you want to make sure that you have funds available when these opportunities arise. You don't want it to miss you and say, man, I know I broke again and I missed this IPO or I missed this APO. So what you want to do is that you set up either a standing order or a salary deduction. So you pay yourself first. That money goes directly to your investment account every month. And when an opportunity arises, you have funds in order to pursue those. Do your research. And it's not hard. I make it super easy. I put information out there all the time. David always puts information out there all the time. He's writing for the papers now, for the Observer. Marc tweets a lot, #finance Twitter Jamaica. There's no reason for you to be ill-informed about things that are happening on the market. So just to summarize, let's get this money, start early, start with what you have, set up a standing order, a salary deduction, and do your research.
Thanks for that, Khalil. And guys, yes, please keep the tweets going. Hashtag JMMB Elevate. I love those nuggets. And I particularly like the salary deduction one, because if you can get it out of your space, you don't have it to spend, you'll be less tempted to spend it. So that's an awesome suggestion in particular. Thank you so much, Khalil. Much appreciated. Marc, real quick, what's your final nugget as we try to get out of here before curfew?
Yeah, man. So for me, what I would say is when you look at the wealthiest people in the world, the only common denominator among all of them is that they own a lot of equity, right? And so for me, I would just like to encourage people to really take equity seriously. If you're young and you can afford it, then the bulk, if not all of your portfolio should be in equity. If as you get older, talk to your licensed financial advisor. About what portion of your portfolio should be in equity, but take equity very, very seriously, because in my humble opinion, over the next 20 to 30 years, Jamaica, we're going through our golden window, and tremendous equity opportunities are going to exist. And so, you should definitely take it seriously and do your research and educate yourself and so on, just like everything we've been talking about.
Love that. Youth is definitely a time to get in stocks, because and a lot of stocks, a huge portion of your portfolio, because you have all those years to be able to reap the benefits. Andrew, what's your final nugget?
So outside of what Marc and Khalil just shared, I think it's important for us as investors to ensure that we have a goal working towards. I would have mentioned earlier that whenever you don't have a goal, money finds everywhere else to go except where it should. So ensure you find that goal, you identify that goal. There's no reason for you to not with all the information that is out now. There's no reason for persons to make uninformed decisions. So do that research. Information is at your fingertips everywhere you go, and seek the advice of a licensed financial advisor, who can help you to direct that information that you have into a positive decision. So those are some of the keys that I'd like to leave with persons, not just for 2021 but onwards.
Love that. Love that. Thank you so much, Andrew. And last but by no means least, David with the hat, loving the hat still. What's your final nugget?
Well, Khalil took away on the points I was going to say, but really and truly, just start your change today. So, open that account, and along with that salary reduction, Khalila, a person can just use a health fixed deposit as another means to, clamp down those funds to ensure that they don't misuse it in a sense, instead of doing everything where you should go. Then you also, read more. As Khalila mentioned earlier, I write a lot, write in the paper almost every week. My quote unquote research in a sense is just right there online if you want to go and choose a buy paper in physical form all the time. So I read the Trinidad market, the TTSC, even the Barbadian Stock Exchange. Look at even companies like Parrot, which actually listed publicly on the Nasdaq. And the research is really and truly is you have to use proxy companies to guide your position. So I use Pressmark to guide how the market is doing here in Jamaica, how the economy is proceeding probably, Prestige Holdings was TGI Fridays here in Jamaica, we could expose to Carreras, and those kind of things. But one key thing I want to point out before I'm out is that the vaccination doesn't necessarily equal normal. Remember, you have to vaccinate a particular number of persons in the population, a percentage population, in order for you to actually have relative normalcy, unquote unquote. So just because the vaccine is out doesn't mean normalcy must return tomorrow. Damage COVID did is going to vanish overnight. And we can also do like in the US, where we can just print money that there is no tomorrow to just, say, hey, here's an option that we can just use to get everybody else the whole that came from COVID. So right now, it is normal, but you have to just look at what's coming next.
Yes, it ain't over. It's not going to be over for a while. It is going to be a new normal. I don't know if life will perhaps ever get back to the way we knew it. But the one thing is sure, guys, we're going into 2021 with a mentality of abundance. We are seizing opportunities. We're not stopping. We're pressing through. We're using wisdom, information, education. We're building our brands. We're looking for the opportunities. We're leveraging them. And yeah, we're doing what we're doing. We're not stopping. We're not stopping. Guys, this has been an awesome session. Thank you so very much for your participation in Elevate 3.0, a great way to kick things off here and wrap things up actually for day one. And guys, again, tomorrow we are back at it with some more awesome speakers. Our platform and the booths open, the virtual rooms open at 9 a.m. We're gonna the first fireside chat with Terry, Lysandra, and Scott will begin at 10. And then now we move into the afternoon sessions with our keynote speakers, John Henry and Stacy Flowers, will be joining us live on our virtual stage from Farin. And they're going to be bringing some awesome perspectives as well. Because we live in a global world, right? We know everything don't start and stop at Jamrock. We're getting the nuggets. So guys, we're wrapping up here so we can get home before police lock we up. Kidding. But yeah, we got to get out of here. Curfew. But thank you so much, guys. Thank you to everyone who participated, again, for sticking through with us through all the technical challenges. We're just doing what we have to do with COVID, but we thank you so much. Again, keep the activity going, keep the tweets going, keep the hashtag JMMB Elevate, share the nuggets, share the wisdom, and walk good, God bless, and wash your hands, wear your mask. Thank you so much. All the best. Take care. Bye-bye.